The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, you get the Dow Industrials up 22. Nasdaq is down 3.5. You get the S&Ps up $1. Gold is up $14.20. You got silver up 47 cents. Platinum is up 5. You got copper up half a penny. Light sweet crude is up $1.21 at 46.23. Bond market's in trouble, folks. Okay, it's going to be really wild watching this bond market, the dollar, and the metal market as we come into that 2 o'clock Fed announcement tomorrow. The volatility, no doubt, has been in spades, will continue to be in spades, and I expect the both up and down is going to be like vicious tomorrow. And where I'm coming from with that is how the bond market traded yesterday. The bond market, folks, in the matter of 6 hours, went down 2.5 points to 30-year. That's a heavy number, man. King Dollar's off 355 ticks at 95.43. King Dollar just can't handle higher price. Our phone number is 877-927-6648. Let's first go over and we'll take a look at. Let's bring this up right now. Actually, I'm going to bring the bond market up first because the bond market, to me, is okay. So U.S. I'm going to put the continuous contract up and I show you what we're looking at here. So the 30-year, what I have up here first is the continuous contract, right? I'm going to bring this back a bit. And what you have is this. The first high in the 30-year was 166.27. That was on April 3rd, the week of April 3rd. You came down and we filled the gap. Okay, and it's interesting. What's interesting about this gap is there was a whole different series, and it was like almost, you could make the argument that, hey, the gap never should have got filled. Well, guess what? It got filled anyway. Then you did another expansion up 163.01. So your first high up there was the level 166. The bottom of that was 163. Then, and what you had done is this. That was the first time after we made this high that you actually came off the high with volume. And I was like, okay, man, But guess what? Market goes all the way back topside, wants to get into that area, couldn't hold it. Now what we've had, I'm going to fast forward you to yesterday, what we have. What we've had now is this. We've had two separate downdrafts that have had volume. Okay, now we didn't take out the swing points, so it's not an ABC structure down in the context of an ABC structure with volume. You can say it is an A to B, C to D, price-wise, yeah. Bottom line, what you do have, however, is that now you're coming off highs with volume. We had gone sideways with lighter volume. That's telling me that, guess what? This bond market is screaming that the short-term rates themselves are going to go up. Now, that's on a technical basis. On a fundamental basis, because of the velocity of the move yesterday, I believe I think there's 12 primary dealers. And what a primary dealer is specifically, folks, is, let me just see, because Goldman come out with something this morning. And it says inside that what Goldman come out with, and it makes sense that Goldman did it too, because they're the ones that probably sold away. Okay, so here it is right here. So check it out. Goldman Sachs says financial markets are vulnerable because no one can agree on what the Federal Reserve will do. Treasuries whipped around amid the debate. Short-term treasuries rose Wednesday, rebounding from a sell-off earlier when retail. It's amazing. So they're saying short-term treasuries rose Wednesday, rebounding from a sell-off a day earlier. That is not a fact, folks. The bottom line is that Treasury sold off in an incredible way. So this is Goldman's quote. There's a consensus. There is a lack of consensus among policymakers, which is the reason for them to hold off when they finish meeting Thursday, he said. There will be some concern that the market's not prepared. There's a risk to an adverse market reaction. Goldman is one of 22 primary dealers that trade directly with the central bank. the way that the market sold off yesterday, folks, in the 10 and the 30 years, looks to me like it's the primary deal is that we're actually selling. Now, you can get the conspiracy deal going saying, okay, did Goldman sell the baby down so that they wouldn't go up on rates and put the fear of God inside the Fed? Maybe. Or, in fact, has the Fed already decided they're going to go up? The primary deal is no, they're going to go up, and they sold it down. Either way, the Fed is going to pay attention to what happened in that bond market yesterday. Where the divergence comes in the marketplace is this, is that if we go over now, we take a look at King Dollar can't handle higher price. King Dollar went to 96 today. It's at 95.42. Bottom line, wants to come down. It looks like it's going to be a small ABC structure on the way down. That's saying King Dollar is going to go after 92.85. And if we go right back to the gold market, bottom line is if they're going up in rates, gold shouldn't be going up, but yet it's going up, and it's going up good. When we started the program, gold was up $14. It's up $15.80 right now. Gold wants to run to $22 up right now. And where I'm going with that, by the way, folks, is this: is that if you take gold on an intraday basis, when we broke topside with velocity, wide price spread, accelerated volume, all with a measurement. You take the highs that it was into. That high was 11.11. The low of that was 10.98. You get $13. You know, you take the 11 plus 2, 13 on top of the 11. That's your number. So it's 11.24. That's what gold wants to go to. You know, fast, furious. It's a nice, quick way of doing things when you're intraday inside the marketplace. So the divergence is out there. And that being said, now, so check out fundamentally what you can have here. The Fed goes up, but the Fed's going up because of the fact that what you have is that inflation is already inside the system. So even at 25 basis points is not going to be a huge deal in the marketplace. Where it will be a huge deal, however, for the S&Ps, you know, because the volatility is out here in spades. The S&Ps want lower price. The NDX 100 yesterday failed on price, failed on volume, all of the above. What we will get out here today is this. It'll be subtle, but we'll get a better indication of where this market wants to go tomorrow. And this is where I'm going to be looking at. If we take the SPY first, okay, so SPY has gone to a higher price. If, in fact, the SPY can't hold price and it even has lighter volume than yesterday, that's an indication we're going lower. The NDX 100, thus far, let me see, I believe NQZ5. Okay, so thus far, the NDX hasn't got over the highs of yesterday. The benchmark on the NDX is 4361. Now, the key is going to be, you know, if you just go sideways and the volume stays light, that's not going to tell you a whole bunch. That would still say going south. You go sideways and the volume picks up on the swing point, that's saying we will break these consolidation we're in, we'll go higher. You pull back slightly and the volume goes up, that's saying we are going downtown. Those are the three variations that we have out here. And you can expect that inside those variations, we're going to have some juice out here today because this back and forth is going to continue to happen all day long. Inside the Dow Industrials, the strength inside the Dow out here today, you had GE was up 47 cents, ExxonMobil's up $1.25, Chevron's up $1, Procter & Gamble is up 53. Taken away from it on the way down, Pfizer is down 27, Intel is off 19, Disney is down 43, and Verizon is off 12. Inside the NDX 100, strength versus the weakness. The strength is JD.com, that's up $1.27. Baidu is up $6. Wynn Resorts is up $2.92, and Netflix is up $2.76. On the way down, taken away from it, you get Avco Technology, that's down $2.81. You get BioMarlin down $2.33. Amgen is off $2.16, and Liberty is down $44. If we go over to the biotechs, we take a look at the IBB. IBB's flat out here today, so the IBB is not saying where anything wants to go out here. Now, what we do have, let's go to the XLF, because the XLF started coming in with some juice yesterday, meaning going higher with volume. The benchmark hasn't hit the benchmark yet. The benchmark is 23.54. We did 35 million shares there. Yesterday, what you did, you got to 23.47. You did 33 million. That's going to be a good indication to look at. Why? Because if the Fed goes up 25 basis points, it'll widen the spreads. That's when the banks start making some real juice. We go over to the XLE. We take a look at the XLE. XLE out here today, up 2.6 million shares. We're up a buck. 3 times 6 is 18. Okay, the volume's not bad here. It's going to need more volume, but it's not bad. Let's go take a look at ExxonMobil. Exxon. Yeah, Exxon's not enough. Okay, so Exxon's got 2 million shares. 2.6. Nah, it's not enough. Okay, so this is still a dead cat bounce on Exxon Chevron. Let's go take a look at the actual oil market. Oil's moving out here today. You're up. You get 45,000 contracts traded. It's not bad. You're going after 217,000. It looks like oil's going to need more volume also. Yeah, it's going to. So what oil's doing is this. So check this out. Oil's coming into the highs of the 11th, September 11th. There's not enough juice here. It's nothing like gold, by the way. So this is going to be interesting. And we'll do silver as soon as we come back. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials up 27. NASDAQ's up 1. S&Ps are up 2. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 29. Nasdaq's down 2. S&P's are flat. Gold's up 15.40. You got silver up 48 cents. And as you come over to our website at TFNN, folks, you're going to see right on the front page in the carousel, Gold Report, the 700th issue. Save 20% for as long as you subscribe. We are doing a special this week. So yesterday I came out with the 699th issue of the Gold Report. Next week is the 700th issue. That's 13 and a half years, which is just went so fast it blows my mind. Bottom line, if you have an interest in the metals market, check it out on the front page. You can save 20% on the subscriptions as long as you have the subscriptions. And that is going to be good until this coming Tuesday. Bottom line is that you can get yesterday's report. Go over there right now. So now let's go over and we're going to take a look. We just looked at gold. Now we're going to go into the silver market. Silver, you know, once again had to get silver had to get back inside the 1442 area, and it's back inside here with a vengeance, man. Silver's a trip, man. Silver is just like, you talk about volatility, man. This silver market is just like crazy. So bottom line, you not only got back inside it, you know, silver right now, when you take a look at the context of silver is up 3.4%. This morning, and that's how silver trades. And unfortunately, it breaks down like that. And when it goes south, when it goes north, it does the same thing. So this morning we're at up 49 cents. You're at 14.82. The range that it had to get back inside is this 14.42 area. It's back inside, and it has the juice behind the move. So what does that set up? Well, that sets up that we're going to get a run up to 15.77. We'll see how that shakes out from there. The gold bugs index is up 489 this morning. That was crucial for that also. Why? Because that was in a lower range. That little baby, I'll get volume later, but most of the gold equities right now are running on gold, running on volume, folks. The XAU also up 206 today, and if we look at some of these stocks, you're going to see that you're getting the expansion of volume. You're getting the price coming in. An Eagle right now is up $1.22. You've done thus far 746,000 shares, and you know, you're going to want like 4 million. Let's see, what are we at? So you get an hour into it, 7, 6 is 42. It'll do about 4 million. So that's pretty good juice right there. We go look at Rango Resources. Rango's going to need more volume. It's up 216. You get 230,000. That's still going to be enough. No, that's going to come in at 1.1. Franco-Nevada FNV. Franco-Nevada is up at $1.59. That has 167,000. And that's going to need a little bit more. Let's go to Royal Gold and take a look at Royal Gold. Royal Gold is that's up $1.60, and that is going to need more volume. So there's a little yin and yang inside this deal. Let's go take a look at PA. We'll take a look at a few of the silver stocks. So Pan American Pacific, you get 500,000. You're coming into, oh, that's really good. Okay, so that's a good setup. You're only coming into 1.4 million. You get 500,000 already. You get Heckler is dealing with 1.3 million. That's a good setup too. You're coming into 5 million. Great Panther is dealing with 78,000, and that's coming into 200,000. Yeah, you're getting some juice. And that's, listen, what has happened in the metals market is that we had buyers at the beginning of August 12th and 13th, as well as the 24th. You back down, and it showed that we had no sellers, but we didn't have buyers. Today's going to be a big day out here, meaning that it looks like you're going to get the price spread, you're going to get the volume, you're going to get all of the above. That is saying that it's going to run back to the 24th. Now, this is what's really cool. If, in fact, gold wants to run back to the 24th, will the S&P run back to the 24th? The August 24th we're dealing with here all over the place, which is going to be a mind blower because, of course, the S&P is dramatically lower on the 24th, gold's dramatically higher, and dollar is dramatically lower. The dollar is saying we're at 95. The way the dollar came down on the 24th is saying the dollar wants to go to 85. Now, that being said, if we go back to bonds again, bonds are dramatically higher on the 24th. Man, we're going to all learn so much between now and 2 o'clock tomorrow. It's going to be a mind blower. And you know, be really a mind blower, folks, if it just flattens out and does nothing. I don't believe it's going to do that, but you want to play with all these different scenarios in your head because that's the way you're going to learn something. Dow up 33, NASDAQ is flat, S&Ps are down 4. S&Ps are flat. We're going to be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now are up 30. You get the NASDAQ flat. S&P's up $1.50. Let's go over, and we're going to take a look at Federal Express. If you want to see something that's pretty wild here. So you pull up Federal Express, and FedEx come out with numbers today, and bottom line is that, let's go. We can go through the numbers first. I'll give you an idea of what they're saying. So they've added 50,000 workers for the holiday season coming up. Their, let's see, production, the production is up 2.6%. Their outlook is saying that they see 1.8% in growth. They had seen a 2.5%. Numbers, however, go like this. They are cutting their estimates by 3 cents, which actually is 15%, which is a big number. Okay, weaker truck shipping demand, and it's like, okay, how are you getting weaker truck shipping demand when, you know, we know that the internet was selling thousands of things on the internet? Well, the post office might be cutting into them. I'm not sure about that. What is so intriguing is this. So it's down $5.35. Gasoline's got to be one of their biggest costs. And gasoline, folks, has gone down dramatically. So it's like, man, what is the, you know, is this downdraft more severe than you even realize? Well, when we take a look at FedEx, if we put this on a chart, what you're going to see is this, is that you're going to see that, excuse me, we definitely have the high volume, you know, spike down at $1.30. Now, what happens at $1.30, which was on the 24th, you really, you know, evidently there was a couple trades that were done that day, but you technically it would be better if you just look at the following day at 145. Well, 145 has 2.9 million shares. The high of that day was 153, the low was 145. It's going after that right now. We've done 147. We've already done 2.3 million shares. This thing's going to be down $7 or $8 today. You know, it's building cause right now to break another small ABC structure on the way down. So when you put that together, it's like, man, okay, you can make the argument that maybe less of us are using FedEx. We are. I can tell you that. You know, the post office now basically looks to me like they compete with them beyond belief. It seems like you can mail a letter for 35 cents and it gets there the next day. So it's like, okay, that could be hurting them dramatically. Bottom line is that there's a problem in paradise there with FedEx. If we go over to UPS come out with numbers yesterday. They were decent. UPS pops up, but guess what? It did 5.2 million versus 6.5 on the way down. UPS also is in a downtrend. I mean, a big downtrend, too. The high in UPS was 114. We're at 99 right now. And you're not only at 99, but you're at 99. These lows at 93 all have volume. So in both cases, that's saying that we're going to lower price. Now, What that could mean is that we are doing everything digitally much more, and the competition inside the package business has got huge. And as Jay just says, you got to love the post office box flat rate. There's no doubt about it, man. The thing that's a mind blower is that they may have priced themselves out of the marketplace. You know, I mean, you know, I remember when FedEx used to be $10, $12, and it's just 18, 20. It's like $20, man. Were you kidding me? You go 35 cents. Bottom line, anything that you need that quick. Most of the time now you can do an electronic signature. There's a lot of different things that are happening. Bottom line, you go over and we take a look at these transports. First, it was the trains that were bringing the transports down. Now CSX. Let me just see how this is working out today. So CSX, yeah, this is the end of a dead cat bounce. It's going to be interesting watching this shake out. So you have CSX has just gone from $37, went down to 24. You're up to 29 right now. This is it's coming right into ice. And what that's saying is that the oil numbers and the transports in oil and sand going into the full fracking area, that's going down. It looks like transports, meaning the railroads, FedEx, UPS, they're still going to have more pressure big time. We take a look at some of the Dow stocks out here. This is what you have. You have ExxonMobil up $1.17. Coke is up 21. Oxy's up 33. Big Blue is up 44. Walmart is down 7. The Walmart deal is a big number, man. It's hard to believe that Walmart not only can't handle higher price, it can't get out of the trading of the 24th. That's saying that we're not buying junk, man. You know, not just Walmart. I'm just saying in general. Consumer Nation evidently is not buying a lot of stuff. Walmart has just gone from $90 to $64. It's been a one-way route since September. So it says quite a bit. J.P. Morgan. Let's go take a look at J.P. Morgan. J.P. Morgan right now is trading. This is going to be intriguing, man. So J.P. Morgan yesterday had some juice in it. It did 14 million shares. You got to 63.89. We got to 63.98 today. We'll still do. We'll still do. Yeah, we'll do that 14 million. So that's going to be that's pushing the September 9th high, and that is pushing it with volume. So bonds. Let's go take a look at those bonds again. I think bonds are going to be fun. Bonds are going to end up being a nice trading vehicle, folks. If you've never traded bonds are sweet to trade, but I think I'm going to give it a couple weeks on a counter trend bounce, and my head's going to start getting wrapped around bonds again, because it looks to me that, the bond market looks like it's going to come to lower price. If we go, watch this. I'll bring the 2-year up. What you had yesterday is So when you're looking at interest rates, the curve can go 2-year. These are all treasuries, all U.S. bonds. 2. Well, that's a note. 2, 5, 10, and 30. Okay. So the way banks make money, folks, is that they make money on the spread of the curve, because what ends up happening is that, and this is where the disconnect always comes in, where banks can go BK, but what ends up happening is that the Fed saves them, is that you're basically taking money on a short term, you're lending on a longer term, and that turns into problems when there's illiquidity in the marketplace. That being said, in order to get a good handle on short-term rates, because what we're talking about with the Federal Reserve is you're talking about going up from 0 to 0.25, to 2.5 to 0.25 to 0.50. The quickest one that will get affected is the 2-year. And the 2-year basically went south fast, furious, and all the above. Percentage-wise, it was a much bigger move. When we take a look at this 2-year, the 2-year right now broke the trend that had been in place going all the way back till September of 2014. Okay? So that says, so picture this, we're at 9922.18. So what that means, there's 32 points in a bond. That means that the 10-year right now is paying 10 ticks. Well, when it broke at 98.15. That's saying that the 2 years is going to start paying, or can pay, 1.5%. That's insane. That's that. When you look percentage-wise, think about that for a second. That's huge. Okay, so now watch this. Now we'll take back the 30-year to September of 2014, just so you can get a handle on what it looks like this bond market wants to do. So we take this back to September. Where are you? Right here? September. There she is. So the 30-year right now is at 153. That's saying the 30-year wants to go down to 136. It's a monster move, right? 136 to 153. Do you know what that is in the futures market, folks? That's 18 grand, okay? We do take a look at the 10-year. We bring the 10-year up. Excuse me. TY, okay. November, TY1. TY1. Come on. For some reason. Won't give me that one. Okay. I can't get that 30-year, that 10-year right now. Bottom line, it's pretty dramatic. So the volatility is going to be there. All of the above. Volume-wise out here, what we've done thus far is at the NYSE, 187 million. Inside the NASDAQ, you've done 397 million. Some of the higher volume stocks out here, this is what you have. Hewlett Packard is up $1.14. They're laying off 30,000 people. Apple is down 8. Netflix is up 277. You got Pfizer down 44. Molson's SAB, I believe, is getting taken over by InBev, or they got a run on them. That's up 9.30 at $81. Exxon's up 120. You get Facebook down 20. Zuckerberg came out yesterday. Let's go look at Facebook, and they said that they're looking into having a do not like button. That's going to be really weird, man, if they get a do not like button. I mean, you know, they changed the world like having that like button, no doubt, but I can picture the do not like button, because what he is going to be doing then, that's going to be the ultimate kind of social deal that anything and everything goes. And that's going to be really wild if that's the case, man. But bottom line, you know, we'll see where that shakes out. Market right now, you know, we're going to have a fluctuation. NQZ, it looks to me like that the first sell down inside the NQs again were pretty intense. You know, we'll see whether you get a second sell down. The first sell down, same MO, you know, we'll see how it reacts at the 4.335. Right now you're at 4.342. If this keeps hanging there, then you have a flat market all day. You get an expansion of volume down there, and you get anywhere close to 4.326, which is not far down, then there's going to be a problem in paradise. What you would have there is that the NDX 100 itself would give up what it gained yesterday. But, you know, we'll see where that whole baby is going. We go over to the UK. We take a look at the UK. UK right now hasn't been able to handle September 9th. That's up $77. Hasn't been able to handle that area. You take a look at the DAX. DAX also hasn't been able to handle higher price. You know, the DAX was up. Right now, the DAX is up 27. The DAX was up 100 and, my God, let's see. It was at, yeah, it was at 10,336. Right now, we're at 10,215. So it's given up 115 points. And we're dealing with, let's see what we're dealing with. It closes at 11:30 Eastern Time. You get another hour, no, another 45 minutes. So the DAX is sold off all day long. That is going to be a problem for our markets come at 11:30. That sell-off continues. Our markets will look at that sell-off. In Asia last night, bottom line is that you had Asia was up, and they were up pretty good. Percentage-wise, they're up definitely good. You had Shanghai up 4.9%. Hang Seng was up 2.3%. You had the Nikkei up 0.8%. If we go to the Nikkei first, because I think I get the volume, and the Nikkei was flat. Yeah, the Nikkei was flat. And, oh, that's good. Hold on one second. Then I get the HSI. Let me see if I get the volume. This comes in a little bit later. If I get the volume and the HSI, I'd be dynamite. I do. Okay. So we did 2.1 billion. You're coming into 3 billion. Yeah, still not enough. So what you had is this. September 9th, same day, you had 3 billion shares. Last night, we did 2.1. It's not bad. You did have an expansion, but not enough. Let me see if Shanghai, if I got the juice in Shanghai. And what happened also in Shanghai, well, here, let me get this for you first. So Shanghai, we went up 147 points. Yeah, I got it too. Beautiful. Okay, so we did 27 billion going into 37. Yep, not enough juice. So we did 27 billion going into 37 billion last night. That's still not enough juice. What is intriguing is that, we know our own banks, okay, they continually will do anything and everything and just pay the fines. What you had yesterday with JP Morgan, bottom line is this is a trip. This is gonna be a real trip, because I'd hate to be working for JP Morgan in China, because what has happened is that Bloomberg got a hold of here, let me see if I can find this for you. This is pretty wild. But all the banks have done this. And what has happened, folks, is that China, here it is right here. Okay. Some banks are scaling back offerings that enable clients to indirectly wager against Chinese stocks through Hong Kong's stock exchange linked with Shanghai. JP Morgan Chase stopped offering so-called synthetic shots on shares under the Shanghai contract arrangement, according to an email from its prime brokerage to clients, including hedge funds, this week. Credit Suisse also cut back on products that enable synthetic shot sellers on the Shanghai Connect stocks. JP Morgan's emailed the clients, a copy of which was obtained by Bloomberg News, said that the decision was related to recent market sell-off and increased scrutiny from Chinese regulators. Bottom line is that you're putting people in jail going short stocks, folks, okay? Crazy. Stay right there. We'll come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow Industrials right now are up 13. The Nasdaq's down 7. S&P's are flat. We get gold up $16. You get silver up 50 cents. You get these commodities running. Oil, rejected a higher price first. Now it's going higher, and it's going higher with velocity. And when you come over to our website at TFNN, folks, if you are interested in the metals market, well, the 699th edition of the Gold Report was put out yesterday. You can get that right now. Test drive it, 2 weeks absolutely free. What you'll also get, if you'd like, is that we're doing a promotion. The 700th edition is coming out next Tuesday. You can save 20% off your subscription on a monthly basis. Check it out on the front page of TFNN. That promotion is good this week only. Market-wise out here, this volatility is going to continue. The real key is going to be inside this volatility. If we go over to the NQs just for 1 second, this market, folks, is on edge. I mean, it's on edge big, too. And the bond market is the one that I suspect is can send it into quite a spin. So we'll see. The NQs just came down to the 43, 41 area. It's the 43.35 area, though. You break that area out here today. We're going to test it. We have volume down there. We came down there at 10 a.m. It'll get down there. But you break that. See, it's actually going to be pretty easy to break, too, because we only traded yesterday from 1040 over to 1300 hours at that level. Well, hey, we'll see. You break that area, though, that is going to be screaming that tomorrow there's going to be problems in paradise all over the place here. What I do expect you're going to see, no matter what happens, for bulls and bears, you're going to get reactions out here that are going to be so fast and furious, it's going to be amazing. The reason being, of course, is that the machines out here on a continual basis are much faster than traders. And there'll be disconnects in the marketplace, just like there were on the 24th. And those disconnects, I suspect, are going to be fast. The difference is, the disconnect is that we're going to be opened when this happens. What we had on the 24th of August is that the NASDAQ futures were down limit. That was one of the main reasons that the disconnect inside the marketplace was dramatic, because the S&Ps were not down limit. The NASDAQ futures were. What that did immediately, though, that threw a spin inside the Qs. It threw a spin inside the funds, and no one basically couldn't think quick enough in order to price out where the Qs were going to open. So the Qs ended up opening at 84. So watch what happens. When you limit down, if you are not in the futures market, or if you're in the futures market and you're wrong side of the futures market, the only way that you can cover very quickly is go to the base of that. And the NQs, of course, the base of that wouldn't be the base, but the way it covers itself is going to the 3 Qs. Bottom line, that's what you had happening. And inside that context, that's where there was a curveball inside the marketplace in an incredible way. Now, the difference being that when we're opened, you're going to have spikes. The first spikes I expect will be inside the metals, inside the dollar index, inside the bonds. That's the bonds are going to be the ones to watch. And as I said earlier when the program started, I think that the primary dealers already know that the rate is coming, that they're the ones that sold down that market out here yesterday. In particular, because of the way there's a Goldman report that came out this morning saying that the Fed should not go because of the volatility that the market, meaning the market, everyone, the collective market is not ready, and the volatility will, the market itself fundamentally is not ready for it. Guess what? The market is never ready for it. Bottom line, we'll see where this shakes out. You stay right there, folks. I'm Mr. Basil Chapman's coming up next. Steve Rhodes, Darryl Martin, Dave White. We'll be back later. Have a great one. Have a safe one. Look forward to speaking this afternoon, folks. Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.